In this short video, I'm going to tell you why I believe Endeavor IP, trading under the symbol ENIP, could rise 500% over the next few months. And I'm also going to tell you the weird reason this company terrifies Bill Gates and Mark Zuckerberg. Can you remember back in 1999 and 2000 when big technology companies traded at huge valuations? Back then, tech companies were all investors wanted to own. Fast forward to today, and these same companies are now the slow growth behemoths that put investors to sleep. Microsoft is the poster boy for this phenomenon. The stock has gone perfectly sideways for 10 years now. Investing in these technology titans is now a predictable, safe, and slow growth option for pension accounts and 401ks. These companies are now so big they just can't grow fast like they used to. Microsoft and Apple are the new General Electric and U.S. Steel. They're the stalwarts of the U.S. economy. But one thing these titans do have is cash. Apple has $130 billion on its balance sheet. Google has $48 billion. Microsoft has $74 billion. And all three of them are using their cash hoards to invest in an exciting new industry: patents, otherwise known as intellectual property or IP. In August of 2011, Google paid $12.5 billion in cash to Motorola for control of 17,000 mobile-related patents and a pipeline of 7,000 more. Last year, Microsoft paid $1 billion for 800 patents held by AOL. The New York Times said the global land rush for technology patents was underway. In 2011, a group of technology companies, including Microsoft, Apple, and BlackBerry, paid $4.5 billion to acquire the patent portfolio of Nortel. The reason big technology companies are spending their billions on patents is because they're cash-rich and idea-starved. Over the past decades, companies like Google have amassed these huge cash hoards, and they simply cannot reinvest that capital in their own core business. They need good ideas to invest in. In August, Google bought a package of wearable technology patents from Han High Precision Industry. With those patents, Google is developing Google Glass, the new glasses with a computer built in. So where do you and I come in? In the past year or so, a new industry has sprung up that is making investors rich. You've probably heard about it in the news. It's usually referred to as patent monetization, or the more derogatory term, patent trolls. A patent is a right to own an invention. When inventors come up with an idea and patent it, the government grants the inventor a right to a monopoly on that invention. It could be a manufacturing process, or a piece of computer code, or it could be a physical invention. But if another company comes along and uses that invention without the inventor's permission, they are infringing on the patent. These patent monetization companies don't sell a product or service. They're usually operated by a group of attorneys. The attorneys simply raise a bunch of money, say $20 million, and then use that money to buy patents from inventors. The patents they buy are usually already being infringed upon by big cash-rich companies. Think Google, Apple, Microsoft. The attorneys then litigate the patents, either by courtroom settlements or by out-of-court licensing agreements. And here's why this new industry is making investors rich. The return on capital is absolutely huge. Patent monetization companies don't need a factory. They don't need a marketing budget or a big staff. The typical patent monetization company is made up of 5 or 6 experienced intellectual property attorneys. They raise $20 million and hope it turns into $200 million, $300 million, or more by attacking the cash hoards of big technology companies. This is what terrifies the likes of Bill Gates and Mark Zuckerberg. And it's the reason big technology companies are trying to subvert the problem by preemptively acquiring companies with patent portfolios. Here's the bad news. Most of these patent monetization companies are private. They raise money exclusively from wealthy investors and make huge returns for the lucky few invited in. The rich get richer, as they say. But a small handful of patent companies have gone public, and I believe these publicly traded patent trolls represent a big opportunity for the small investor. Already, early investors have made big returns in the public patent trolls. Shares in VRNG, Vringo, which is suing Google, are up 88% since they came public. VHC, another patent troll, is up a stunning 5,597%. VHC, called Vernet X Holding Corp., is suing Apple over its FaceTime technology. MGT Capital Investments is up 45% since changing its business model to monetization of casino industry patents. Worlds Inc., a penny stock, is suing Activision Blizzard and is already up a whopping 109% in 3 months. So, where's the next opportunity? I haven't been wasting your time telling you all of this. And here's your payoff for staying this long. A brand new patent monetization company has just come public. Right now, it lies undiscovered by investors, and I believe it's only a matter of time before that changes and it too rockets in price. The name of this company is Endeavor IP. and the stock symbol is ENIP. ENIP has acquired blockbuster patents relating to wireless communication networks and remote access energy monitoring systems. But importantly, Endeavor IP is led by a patent industry rock star, Cameron Gray. Mr. Gray was a co-founder of Claims Capital and is reputed for his deep experience and knowledge of the patent monetization industry. Mr. Gray is joined by Andrew Uribe, who is the president of Kalima Group. In August, Endeavor IP announced they've filed patent infringement lawsuits against 2 defendants. In addition, they've already struck profitable licensing agreements with multiple big companies. Take a look at the stock chart of VHC. VHC has risen from $1 to $40 per share. $10,000 invested in VHC grew to be worth $400,000. That's why I said this industry is making investors rich. Investors are seeing returns on patent stocks that are reminiscent of the dot-com boom. The returns are huge because with a good patent in hand, a group of smart litigation attorneys can take a huge bite out of the likes of Google, Apple, and Microsoft. Some patent trolls have successfully filed claims for 1% of gross revenues, which against big technology and retail companies is a huge amount of money. And because patent trolls are lean operations with no overheads, no factories, no payrolls, almost the entire amount won in settlements or received in licensing agreements drops to the bottom line as net income. In other words, patent companies are cash machines for investors. And these big technology companies are so afraid of patent monetization companies, they're using their big cash hoards to acquire patent portfolios. This is another reason I believe ENIP could turn into a big winner. All it takes is one big company to believe it's safer to buy them out than fight them in court. A buyout would lead to a cash bonanza for shareholders who get in early like you and me. Endeavor IP, trading under the stock market symbol ENIP, is my stock pick of the year. But you're probably asking yourself, why should you listen to me? Well, my last stock rocketed from 25 cents a share to 78 cents a share within 1 month. My pick before that was even more successful. It went from 23 cents a share up to $1.81 a share. If you would like a research report giving you more information about ENIP and how it could make early investors rich, put your email address in the field below. My system will immediately send you a research report. In addition, you'll be added to my subscriber list, where you'll receive future stock picks via email, all free of charge. I'll never ask you to pay for anything, ever. I usually send about 1 newsletter every 2 weeks, and remember, you can unsubscribe at any time by clicking the link at the top of every message. That's all for now. Enter your email below and give the next page a few seconds to load.